Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and a week that was filled with reports. We're going to talk some weather that's going on. We're going to look at what's happening in Brazil. As we know, there has been some fire concerns and drought there as well. There's a lot to focus on as we look at the global side of today's markets, so stick around.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again as we dive into the market trade. Joining us, Heather Ramsey with the ARC Group and Mark Gold with Top Third and StoneX Financial. Both of you guys were at Husker Harvest Days joining us this past week, but we decided not to record your portion of it because the report hadn't come out as of yet. And that's where I kind of want to first start out. And Heather, looking at those numbers, anything come as a surprise or nope, this is kind of what we expected?
I think when you think about whether things were a surprise or not, I was really hoping that that report would be a little bit more benign than what the market had ramped it up to be. So I think the surprise is that there was no major surprises, honestly, in my opinion. To have a fairly benign report at this point in time of the year, I think is beneficial to the farmer who maybe doesn't have necessarily everything done that they need to have done. I feel like not taking yield up to some crazy astronomical number on soybeans actually helped the farmer this go around. I'm not saying that that's not going to happen at some point, that we don't see that at some point potentially, but the report yesterday felt very benign. I do think one of the changes that hasn't really been talked about too terribly much was the lowering of the beginning stocks for 24-25, which if you understand what beginning stocks are, you mean that the ending stocks for 23-24 got lowered because of some usage and some demand and export numbers and things like that. So that's always a good sign for corn. And we want to continue to see those export numbers climb. So that didn't really, I don't think I heard too much about it yesterday, and I didn't feel like I saw very much trade reaction yesterday. That could be what's given us a little support, as well as some other news here today, giving us a little support on corn.
Was there, Mark, no surprise, maybe just a little bit too much hype and anticipation from this report?
Well, I think the surprise was that it wasn't overly bearish. You know, they were talking about bigger crops get bigger. We saw the corn yield go up by 1/2 bushel, but they left the beans unchanged. And keep in mind, this is as of September 1st, and the heat that we've seen in this market and the dryness throughout much of the plains, throughout much of the Midwest, hasn't been factored in yet. I like the fact that they lowered the bean carryout by 10 million bushels. They were looking for an increase, I think, of about 25 million bushels. So I think that's certainly helpful for the market. And most importantly, we still have the weather concerns in Brazil. We have weather concerns in Australia. We have the war going on between Ukraine and Russia. The Russians, one of the reasons the wheat is up today is apparently the Russians hit one of the Ukrainian ships with wheat headed for Egypt. So that's put a spark into this wheat market. The wheat's acted great. We're on a nice rally here, as well as the oats, really the corn and beans as well, even though the beans are down a little bit here today. But overall, I believe we can see higher prices out here.
So you brought up oats, and we talked about this during Husker Harvest Days, that old saying about oats knows. Yep. Is there any inkling with this? Because what you're seeing in the trade action?
Well, it's certainly been the leader in the last 2 weeks. We had the sell-off a week ago Friday off the unemployment numbers, but they just kind of fell into line with everything else that was happening, mainly in the bean market, where they've come right back, making new highs for this leg of the move here. I think that's, it's important to keep an eye on other intangible things like, the oats doing what they're doing out here. The wheat certainly followed. Corn, we're up, a dime since the report. I think that's all friendly, considering what this report could have been, which was incredibly bearish. It didn't happen. So we saw good demand. We saw the corn crop increased a little bit out of the yield, but overall, the carryouts weren't out of range except for the beans, which was lower than expected.
Heather, during Husker Harvest Days, guys were saying, well, it didn't rain during that show, but we know rain's coming into the forecast this coming Wednesday through the weekend. And guys I've talked to said, hey, we're good with setting combines aside. We need this moisture. What are you hearing when it comes to this forecast and what your guys are saying?
Well, I definitely think, no one's going to say no to moisture at this point with as dry as it's been throughout the entire state of Nebraska and the entire Midwest the last couple weeks. Farmers never say no to moisture, and if they do, it's a very unique situation. But I think that a little bit of rain, some of these longer season beans, that would help them a little bit kind of sustain and maybe quit losing some yield. We've had really hot, dry, windy days here the last week, and that really zaps your yield potential on soybeans. So getting a little shower here would not be the end of the world. Corn is kind of headed in the right direction anyways with the weather. So I don't know that we get anything necessarily from a yield standpoint on corn, but again, any moisture is good moisture at this point with as dry as it has been. I will say we've got guys in the field already kicking through quite a bit of early season corn, getting a start on some soybeans. This is that time of year where they want the rain, they love it, but we're going to hear them complain about it still because it's going to interrupt the progress that they're trying to make in the field. I do think when you look at it from a marketing standpoint, go back to your fundamentals and go back to basis. If we've got high processor competition areas that you're dealing with, a rain is actually going to help you a little bit on basis here. You're going to get a little extra time frame to be selling good basis values if you haven't done so already. That'll kind of hinder some deliveries and back some guys up. I don't know that it's going to give us another 2-week window before basis really falls into collapse because it's gut slot harvest, but it might give you a couple extra days. And the one thing I'll say is I never know that we're getting any moisture. I hear people tell me that all the time, but until it happens, I think everyone's a little reluctant to believe that we'll actually get much out of this.
Yeah, a lot of truth to that. Mark, what about Brazil and their weather? Are we still having a lot of fire issues and concerns as they try to get this crop planted?
Well, there's no question that it's been incredibly hot and dry. It looks like even through the end of the month, this forecast isn't going to change much. They're having wildfires out there. The river system is basically at a standstill. They can't get grain from the interior into the ports because the river levels are so low. I heard stories that the Brazilians tend to put down a lot of straw on their fields to hold in the moisture, and a lot of that straw is catching fire. So none of that sounds good to me. And the fact that it's going to delay not only getting the beans in, but the longer the beans can't get in, that's not good for the safrinha crop that's going to go in after that. So I think that's one of the reasons, corn is firm here today. Some people are saying it might have more of an effect on the corn than the beans. But bottom line is all of that is good for us. If the Chinese can't get the beans from Brazil, they're going to have to come to us. They still need to buy 24, 25 million metric tons. And hopefully they're going to come to us for a lot of that.
Well, we know that this new marketing year that started September 1 isn't off to the strongest start at this point either, Mark.
Well, it isn't, and it hasn't been really for the last couple of years. We've lost a lot of business to the Brazilians. But if the Brazilians look like they're running a little bit low, and it looks like they are, the processors are having to bring in beans from Argentina. So I'm just not sure, how much is available for export. And if there's any concern by the Chinese of getting grain in, they're going to start buying now, and hopefully they'll buy our soybean market. The dollar, we haven't talked about the dollar. The dollar is down to 100.73 here today. It's down right now 29 ticks. If we can get that dollar under 100 even, I believe it's on a fast track down to 92, maybe even as low as 89. That will be very helpful for American farmers.
Heather, what are you looking towards market-wise as we go into the new week next week?
Well, I think from the standpoint of, risk management being what I'm looking at, like I said, I'm focusing kind of on the basics right now. We know we're in harvest mode. We need to get things taken care of, cleaned up, offloaded at end users. When Mark and I were out at Husker Harvest Days, we had a lot of discussions, people asking us, what do we do with this crop when it comes out of the field? One of the key things people can do is make a plan and not get caught by the DP programs that are out there for harvest. So I think that's kind of key number one. Make sure you're getting your homes lined up for corn and beans. I think the other thing too to keep in mind is when we have these rallies that happen, I know it feels smaller than what the farmer wants right now, but if we're going to put a 20, 30 cent rally on corn here in the next couple of weeks, we got to be sellers. We got to be taking advantage of that. It's much cheaper for me to go out and do that, be a seller, and then re-own some type of a cheaper investment or limited investment upside strategy, save myself the cost of these, open storage, DP charges. I mean, they're huge. They're astronomical in this day and age for a farmer to be throwing away that kind of money on those programs. And so we're kind of just trying to manage the basics right now. I do think at some point momentum will help us on corn. We're starting to see a little bit of that. And I want to be ready to go for that. I don't want to be caught unprepared and not knowing where my grain's at, what the plan is, what's on farm, what's going to town, that kind of stuff. And these are all just like the really boring, basic, fundamental things that nobody really wants to sit down and hash out. But that's what'll make you nickels and dimes in a year like this. You need to be making that. So I think it's best to, be proactive, have a plan, know what's going on in the next, 3 weeks to 5 weeks here. So.
What about for you, Mark? What are you looking towards?
Well, the funds are still heavily short, about 350,000 contracts between corn and beans. We're starting to get these markets come over the 50-day moving average. We've seen wheat. They could be even after tonight, for all we can tell. We'll see what the Commitment of Traders report says. But we haven't seen the funds really get in here and cover these massive short positions. If we can get, some just good little technical signals in here, I think that's what we're going to see. So I think you've got to be cognizant of what the funds do and keep this in mind. We still have big carryouts. So even if we can get the funds to cover, as soon as they're done covering, that's a great opportunity to make some sales out here, take advantage of a nice rally, whether it's 30 or 40 cents in the corn, whether it's 60, 70 cents in the beans. If we can get these funds in, that's the time to start looking at really making some more aggressive sales out here. And I like Heather's plan of, as I always would, of buying back some call options to keep the upside open on whatever you sell.
I hear your noon siren going off. Mine's going off here. I appreciate both of you joining us. Stick around. We've got more coming up. We're going to look at the livestock around the corner here with Kyle Bumstead. As we continue with the Nebraska Soybean Board weekly market roundup, we are at Husker Harvest Days as it wrapped up, obviously Thursday afternoon. But Kyle Bumstead's joining us now to kind of give us a preview of what's coming, but a little bit of review as well to this last week's cattle market, which was nice to see. As you and I are talking on Thursday, we've had a couple days of green on the screen. It'd be nice to see this momentum continue into next week for these cattle guys.
Well, that's right, Susan. It would. Today looked to be a little bit of commercial buying here as we finished out the week, and also some non-commercial buying as well. I think that this could continue here. We did see a little bit of higher cash trade, higher than we were expecting here in Kansas and Texas here. Midday on Thursday, we started trading some 182. Earlier, that number had been 180, but Nebraska late this week has been quiet. There has just not been much trade here up until now.
So what are we going to see to keep this? I know there's been a lot of folks worried about the CPI data and how that's tied to consumer spending.
Yeah, there's been a lot of people watching that as cattle have been kind of affected by the sell-off here in the stocks and the equity markets as well. But today we saw some big swings here in the equities, and cattle just kind of seemed to shrug it off. So it looks to me like maybe these funds have maybe said, we're done. We're just going to cover some of our shorts. Now, they haven't gone long. They've just been covering some shorts here the last couple sessions. So much like the grains, they haven't gone long. They've just been covering their shorts. So you do need to be watching out for that kind of activity, because they could flip and go back short at any point in time. They've made their money. They could pile back into the short side on an extended rally.
So now we're going to be hitting mid-September. What is your thoughts on this cattle market as we really hit this final quarter in earnest?
Yeah, that's a very good question. I'm a little bit nervous. We don't have a decent export program as far as our holiday exports yet. We're not quite there. We don't see a lot of end user right now buying up inventory. In fact, there's been talk of this week particularly some cutting some hours at some packing plants because they're full of boxes right now. So we're not seeing any of that right now as far as our holidays are a ways off. We don't have anything on the horizon that's going to say, wow, we just got a big demand surge that's going to be out here. Don't see that happening just yet, Susan.
And I find it interesting as well that packing facilities on the eastern coast, Ohio East, I should clarify, they're looking to Iowa, Kansas, Nebraska to get them that cattle, and some are trucking them 800 plus miles to be processed because the demand's there.
Well, yeah, that, and they've got to keep those plants open too, and much like we've seen in past years, sometimes they have to operate those plants at a loss. It's cheaper to operate them at a loss as it is to shut them completely down and have to start them back up.
All right, any final words on what we're seeing in the market?
I would say watch this feeder cattle market here moving forward. There's a lot of ballers going to be coming to town here in the next 3 to 6 weeks, so that could have a big effect here on the index moving forward, Susan.
All right, well, we appreciate you coming down and enjoying part of the day of Husker Harvest Days with us here. Kyle Bumstead's been joining us. A quick reminder, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been this week's Nebraska Soybean Board Weekly Market Roundup.